Hello, I'm Randall Boston with Boston Integrity Financial Services, and I help business owners that are planning for retirement, trying to minimize their taxes, and planning for the succession of their business through exit planning or even a potential sale. All right, so today let's talk about what happens when you don't follow my advice and make sure that you do your tax planning in the fourth quarter, and instead you waited till the new year, you've met with your accountant now, and they're telling you owe $40,000 in taxes, right? What do you do? So at this point in time, there are several things that you could do to help minimize your taxes. Basically, 401k plans are an outstanding way to help mitigate taxes. Depending on what type of entity you have, you might have needed to have this 401k already established, last year. So that's why we really focus on tax planning in the fourth quarter. But for some of you, you might still have a solo 401k as an option to help minimize taxes. In 401k plans, you could put up to $70,000 between yourself as an employee and your company as the employer to help mitigate your taxes. And the effect that has is reducing your taxable income. There's things shy of 401ks that you could do, things like SEP IRAs, traditional IRAs, stuff like that could help mitigate it as well. But the key thing that I like to focus on with business owners is that, sometimes you might think about just what expenses could I have written off, right? Expenses are useful, but only when they're things that are improving your business ultimately, right? But buying cars, buying boats, buying all of that stuff, they might be fun, but if there's a better way to mitigate your taxes and grow your money for the future, retirement plans are definitely some of those tools that we would like to use. So one of the things I want to talk about today is just, it's really not too late. If you haven't filed your taxes yet, still, you want to meet with your advisor to talk about what contributions you can make to retirement plans to help mitigate your taxes as well. Sometimes your accountant or CPA may not bring that up because they're not licensed to talk about those topics, and it might not be on their radar as far as things that you could do. They might focus on expenses and tax credits, but that's why we exist as financial planners.